Now let me show you how the Marxists work, this president and his operatives. Goldman Sachs is more than likely an innocent enterprise. But we won't find out about that for years to come, unless, of course, they settle this. But it's more than likely an innocent enterprise. Now, it has already had its reputation besmirched by the Marxists in our government and his administration. Now they take that company and try and wrap it around the Republicans and use it against all of Wall Street. Now, what is Wall Street? Most of us don't have any dealings with Wall Street. Well, these are big bankers and big investors. The Marxists have always hated the bankers and investors. They've always wanted to control them. The student loan program is a backdoor way to take over banks. They use TARP to take over and control banks. The Marxist talks about money changers, usually the Jews, but the money changers. And they want to control the money. Who gets it and who doesn't. Because that way they will have their iron hands around your throat at all times. Whether you qualify for a loan, where you put your money. The Marxist regimes eliminate private banking, just as they eliminate private insurance companies. Gee, sounds familiar? So they want you to hate Wall Street. And by the way, there are cronies in Wall Street, and I've talked about this repeatedly. I've written about it in Liberty and Tyranny. They are not capitalists. They're cronies. It's crony capitalism. I get that too. Where the government takes care of certain businesses and certain individuals, and they take care of their political friends. Goldman Sachs, in recent years, has been allied with the Democrat Party and this president. Now still, because he wants to control the money operations in this country, call it Wall Street or whatever you will, he wants you to hate the bankers and the banks and the investors. He wants you to hate the insurance companies and the oil companies. Do you want to know why he talks about unfettered markets? Because he believes in unfettered government. Now, how did we get here? How did we get where we are today? Here's our little history lesson, which I've written about and talked about from Liberty and Tyranny. Is it because of a lack of regulations or a lack of government? You be the judge. The status is constantly manipulating public sentiment in a steady effort to disestablish the free market as he pushes the nation down tyranny's road. See, I don't need guests on to tell me this stuff, or authors. I wrote this. He has built an enormous maze of government agencies and programs which grow from year to year and which intervene in and interfere with the free market. And when the statist central planners create economic perversions that are seriously detrimental to the public, he blames the free market and insists on seizing additional authority to correct the failures created at his own direction. Consider the four basic events that led to the housing bust of 2008, which spread to the financial markets and beyond. Now, I was the first to discuss this at great length, and it appeared on National Review Online on the corner, and when I wrote Liberty and Tyranny, I expanded on it. Event number one. In 1977, Congress passed the Community Reinvestment Act, the CRA, to address alleged discrimination by banks in making loans to poor people and minorities in inner cities. They called it redlining. The act provided that banks have, quote, an affirmative obligation, unquote, to meet the credit needs of the communities in which they are chartered. In 1989, Congress amended the Home Mortgage Disclosure Act, requiring banks to collect racial data on mortgage applications. University of Texas economic professor Stan Leibowitz has written that minority mortgage applications were rejected more frequently than other applications, but the overwhelming reason wasn't racial discrimination, but simply that minorities tend to have weaker finances. Leibowitz also condemns a 1992 study conducted by the Boston Federal Reserve Bank that alleged systemic discrimination. He said that study was tremendously flawed. A colleague and I showed that the data it had used contained thousands of egregious typos, such as loans with negative interest rates. Our study found no evidence of discrimination. but the study became the standard on which government policy was based. In 1995, the Clinton administration's Treasury Department issued regulations tracking loans by neighborhoods, income groups, and races to rate the performance of banks. The ratings were used by regulators to determine whether the government would approve bank mergers, acquisitions, and new branches. By the way, does it sound like an unfettered mortgage market to you so far? No, the government's all over this business. And for all the wrong reasons. The regulations also encourage statist-aligned groups such as ACORN and the Neighborhood Assistance Cooperation of America to file petitions with regulators or threaten to slow or even prevent banks from conducting their business by challenging the extent to which banks were issuing these loans. By the way, one of the lawyers for ACORN who did this? Barack Obama. With such powerful leverage over banks, some groups were able, in effect, to legally extort banks to make huge pools of money available to the groups, money they in turn used to make loans. The banks and community groups issued loans to low-income individuals who often had bad credit or insufficient income. And these loans, which became known as subprime loans, made available 100% financing, did not always require the use of credit scores, and were even made without documenting income. By government regulation and litigation from the left. Therefore, the government insisted that banks, particularly those who wanted to expand, abandon traditional underwriting standards. One estimate puts the figure of CRA-eligible loans at $4.5 trillion in subprime toxic loans based on government policy. Oh, that unfettered free market.